Here's the deal, my friends. We're going to jump right into this one. Rents are falling all over America as the economy is now shrinking. We've got so many headwinds. I always kind of lean on the U.S. savings rate. It's now at an all-time low. We just have tapped out. We're all out of that stimulus money. And then U.S. debt is at an all-time high. We're leaning on credit cards to bridge the gap. It's a tricky situation. But one of the things that happened early on during the euphoria, during the bubble environment, is a lot of investors poured in to the real estate market and started buying everything from a multi-unit apartment buildings to single-family homes. You name it, they were just grabbing anything they could get. But unfortunately for these investors, they don't secure 30-year fixed mortgages. They're getting, adjustable rate mortgages that they have to refinance. And so now what we're seeing, as the job market's suffering, as the savings rate is now at an all-time low, U.S. debt at an all-time high, the strength and the fitness of the average American now has clearly been compromised. During the euphoria, and that's why I always warn, like, this is a game of musical chairs. The dust is going to settle. There's going to be blowback, and we're going to pay the piper from all this stimulus. And it's playing out right in real time. Now, I think one of the things we have to understand is the amount of stimulus that was poured into the economy, short of a black swan event, some kind of, news event that comes in and just shocks these markets. It's going to be a little bit of a slow bleed, and I think that's what we've seen. But at some point, we're going to hit that tipping point. I mean, we're teetering on the razor's edge right now. So